Good morning, good afternoon, good evening, everyone, and welcome back to the breakfast show. Hope you all had a wonderful weekend. It's Monday, December 15. We have quite a busy week. Not earnings, we do have Micron and Nike. Micron on Wednesday, Nike on Thursday, but we do have quite a lot of, well, economic data that is going to come out over the next couple of days. More specifically, let me actually pull this one up. More specifically, we have all of this. Today, we have the New York Fed Manufacturing Index. We have on Tuesday, ADP weekly employment change, non-farm payrolls, unemployment rates, and average hourly earnings. That's all on Tuesday. Also services PMI. Yes, a new couch, a new environment for the end of the year festive holiday Christmas season. So a bit better. But then maybe start of 26 we'll have something else. Then on Thursday we do have the CPI inflation data that will come out. I do think that is going to be a market moving one, although again we already got our rate cut. We have our more dovish Fed tone for the moment, but at the end of the day, you do want to have some better data out there, especially when it comes to inflation. If it turns out that inflation is under control, I think we are in a much better environment. And then on Friday, we do have the consumer expectations, consumer sentiment. We do also have some comments with regards to consumer sentiment from two analysts, like commentators, I would say. So we have a lot to talk about in today's stream. Right now, this is what we're looking at pre-market. Seems like we are green across the board, although on Friday we were, well, red, way more red than green. So even after today, even if we close out the day like this, we are still down compared to Friday. But yeah, I guess we're going back to the prices not seen since a week ago, approximately, for a lot of these names. As a European, do you think it's better to invest in euros or in dollars? Well, if you're buying US equities, you are going to buy it in dollars. So it doesn't... I can be a Zimbabwean investor. If I buy US equities, I will have to buy it in US dollars. Yes, there are certain stocks that you can buy in euros, but the large majority of them is going to be in dollars. Unless you buy European stocks, then yes, then you're going to pay in euros. So we do have let me already make the poll, so you have more time to make your decisions before the market opens. Stocks might be green, stocks might be red. We don't know. We just know we're going to have some fun. Well, actually, I do hope we do get into a period where stocks don't do anything crazy. Just stay flat for a while, that's also fine. So stocks to end the day: green, red, flat. Voila. That's done. Poll is up. I called Rubrik before earnings and it went up, but it can also go back down again. The stock will do what the stock will do as long as the earnings were good, which they were. That's the most important part. So we have some comments from Tom Lee regarding AI stocks, Nvidia. We've talked a little bit about the rotation, right? The rotation in the market right now, away from AI, more towards financials, industrials, healthcare, and all of that. Because yeah, it seems like sentiment around AI stocks has been lowered, has not become extremely bearish. Although since the start of October, we did have a nice pullback across the board, I would say, when it comes to AI stocks. Might be a good idea to have expectations lower, so we enter a new year where we can actually go and say, okay, this company performs well, so the stock should be rewarded. This company doesn't perform well, and so the stock needs to go down. So let's have a quick listen here.
Now, Tom Lee, Fundstrat Head of Research. Tom, great to have you with us. There's a lot of things to talk about with you in terms of the skepticism now around the AI trade, skepticism around Bitcoin. Are they, in fact, related, do you think?
Related, but not related.
Yeah.
You know, I think the AI trade, I mean, it's been a juggernaut, and we know that the visibility for the next few years is really good. But now investors are just trying to figure out how much to discount, you know, what's the appropriate price to put. And that could drive some profit taking because they've done so well this year. On the crypto side, I think that there has been some concerns about, you know, quantum. And then there was that huge deleveraging event on October 10th. But the crypto fundamental story, I mean, is exiting on a really high note this year. You know, the U.S. government passed legislation and regulations favorable for crypto. And we know Wall Street has expressed a lot of interest in building products on the blockchain. So it's almost like they both have great visibility, but the price levels are just what's being uncertain.
I feel like
What are we saying about the haircut right now? Seems a lot less messy and disorganized than usual. Is this a bullish or bearish indicator?
It's common, though, with both of these stories, though, Tom, is investors questioning the growth, the trajectory of growth going forward for both of these stories. Not to say that things will contract, but maybe growth won't be as strong as we've seen. We've hit the peak sort of growth rates in terms of the story. The maximum bullishness happened with Bitcoin when the administration came on board and things started to sort of go Bitcoin's way. Maybe that was peak sort of trajectory higher when it comes to growth. Same thing with AI. Now it's a period where you're sort of wondering, will this actually get funded after we saw this massive expansion?
Yeah. Well, in crypto, the best years are definitely ahead because today there's only 4 million Bitcoin wallets with $10,000 in it. There's 900 million IRA and brokerage accounts globally that have $10,000. So that's 200 times larger market. With regard to AI, I do think that the business models need to evolve. You know, you can't just charge $20 a month. I mean, really AI, agentic services, but the market ends up being huge because in the US, it's really making 130 million existing workers into super workers. I mean, that's a several $1 trillion market just in the US alone. So I think there's still opportunities.
When do you think that we're going to see the tipping point on that front? And I think arguably you're seeing it a little bit maybe on the margins right now. But do you see a step change 18 months out from now? Is that 5 years out from now? It's because there's also questions, by the way, about some of these services and how valuable they are to people right now. And I know some CTOs and others who are actually saying, you know, we're actually not getting the value out of some of these products that we were hoping to.
Yeah, I think we're in what I'd call the bleeding edge phase, like where everything feels like the tech is in front of the applications. That happened in mobile, which I studied for 17 years, and in internet early days. You know, like when color phones first came out on mobile, or even keyboards, people kind of sneered and said, you know, who's going to be using a color screen? And remember famously what happened when the iPhone was launched and how one of the biggest competitors dismissed it and saying it's just a toy.
Right.
I think we're at that phase with AI where the capabilities will blossom and then services will follow. But that, as you know, the future happens faster than many expect.
So if the business models of these players, which people commonly call the Mag 7 in general, need to change, then what does that do to the valuation? Are we rethinking the valuation? Because, I mean, one distinct change has definitely already happened, and that is asset light to asset heavy, spending on assets continues, et cetera. Is that reflected already, or does there need to be further adjustment?
I believe that AI stocks, especially stocks like NVIDIA, are going to actually re-rate higher. Because if Walmart and Costco trade at 37 to 45 times earnings because they're predictable, then NVIDIA shouldn't be 27 times. I also think the banks are really criminally undervalued right now, like a JP Morgan, because that's becoming a technology company. And in the past, people are stuck in the head that it should trade at 1 times book or 10 times earnings. I mean, they should trade more like a tech stock. So I think tech and financials.
Do you think that of all the banks? Or do you, I mean, JP Morgan in particular is invested obviously heavily in tech. But if I said JP Morgan and then I mentioned a bank 10 rungs down, would you say the same thing?
Well, it depends on how sort of evangelized a bank is towards adopting AI and being tech forward.
So, okay, on this screen right here, like is Wells Fargo on your list of tech forward banks?
Possibly. Goldman certainly is, and I think Morgan Stanley has shown a lot of evidence. So I think banks are sort of getting it, but they are really becoming technology companies.
So even at
Okay, interesting. So first up, going back to the, again, Costco and NVIDIA comparison, right? NVIDIA forward PE 25 times, Costco way higher than that. But again, it's about predictability of future free cash flow. It seems like right now the market is very much willing to pay a much higher premium for a company like Costco than for a company like NVIDIA. NVIDIA previously, got maybe a higher PE. The trailing PE is of course higher. The forward one sits at 25.5 times or something like that. Will it always stay this way? Well, if NVIDIA does continue to perform like this and continues to grow quite rapidly despite being a 4-point-something trillion company, then yeah, we might probably see it go back to a 30 times forward PE. Now, then he touched on the banks. And we know, I mean, most of us view Sofi as a financial tech company, which is literally a fintech company that has a bank. Now, a lot of people on the, let's say, bearish side of things believe that Sofi should be trading at a multiple closer to banks, right? I don't agree, obviously. I do think that Sofi is a fintech company that has a bank that is growing like or as if it is a tech company. Now, once growth slows down to, yes, the, let's say 10% or something like that, then you will not be trading at a higher multiple. But for now, I think Sofi should be trading at a higher multiple purely based on the growth rates. Then he talks about JP Morgan, talks about Goldman, Morgan Stanley mentioned at the end there, saying that they are sort of tech companies. Well, they are still banks. They're not all of them are growing as fast as tech companies, but again, when you look at the predictability of the future free cash flows, then he does make a point. Sofi should be higher, but they diluted twice. First of all, if they didn't dilute the first time, you would not have a higher earnings per share, which means you should maybe not even be trading this high, right? There is a very good quote here from, I forgot, Tim Sweeney. Very, very good quote. He wrote a long post on Sofi this weekend, and he said the quote is like this: dilution in shares doesn't mean dilution in shareholder value. There's a very, very big difference here. Let me actually pull this one up. Oh, not bookmark, search. Here. So he said the following thing. Dilution in shares doesn't mean dilution in shareholder value. It depends what you do with the money to grow the company. Sofi diluted shareholders with the 2026 convertibles, Sofi diluted shareholders with the 2029 convertibles, Sofi diluted shareholders with the July capital raise, and the diluted shareholders with its latest capital raise, and the diluted shareholders with stock-based compensation, each time the stock price fell. From the March 5th, 2024 issuance of the 2029 convertibles, with the worst of headwinds, they diluted you to a 4x return. Do you get the point, right? If you go March 5th, 2024, let me actually pull this one. March 5th, 2024, that's around here. Okay, that's around here. They diluted. So if we say Sofi should be higher, but they diluted, if we go back to March 5th, 2024, well, it's up 263% since. It's not bad. And again, the point being here, and he does give his example of when he invested in NVIDIA early on. NVIDIA also diluted shareholders. But again, as long as the dilution helps to create more value for shareholders in the future, then it is not as bad as what people make it to be. Right? Sofi dilutes in order for the business to grow faster, in order for EPS to actually grow, become better, maybe retire some bad debt, some bad convertibles, and all of that. So in this case, Sofi specifically, there are some cases where, yes, it's just pure dilution and it doesn't work out. But so far, it has worked out for Sofi quite well. We then have actually, let's quickly touch on that already. Some news regarding AMD. We got AMD, Samsung. We have, of course, Micron reporting this week. And so it comes at no surprise that suddenly we have quite a lot of talk about HBM and memory in the market. So let me actually pull this one up. So AMD is reportedly in advanced talks for a Samsung foundry to build next-gen CPU chips of its second-gen 2 nanometers SF2P node using a multi-project wafer setup for early runs. Just in talks right now, nothing is confirmed. So Samsung is expected to fab prototypes soon to see if the process meets AMD's performance bar. Of course, we know that at the start of the year, late last year, Samsung did have some issues with regards to performance, but it seems like they have been catching up more recently. We actually have more news right here. Chosun, I don't know, reports Samsung to reportedly supply over 30% of NVIDIA's HBM4 volume next year, with HBM4 samples now being qualified on the Rubin platform. SK Hynix still holds close to 70% share, while Micron is reportedly under 10% after HBM redesign issues. We've heard some of those things. We've heard also the company say that everything's still on track. Of course, they report Wednesday, so we are going to hear a lot more from them in just 2 days' time. The same outlet reports that Samsung has stabilized its HBM3E12 high yields and is now set to expand supply to Broadcom for Google's next-gen TPU, reportedly pricing about 20% below SK Hynix. So that's also going to be quite an interesting development. Now, you know, I own Micron, and as I've said yesterday in the portfolio overview, I might be taking profits already today. Still keep a position, but might secure profits. use that to increase the cash pile, or allocate to other names out there that might be taking a hit later this year, or continue to trade at attractive prices. Now, going back to the consumer, maybe not sentiment, but consumer spending aspect, we've talked a lot about that, especially when it comes to PayPal, right? PayPal fell because, what the heck is this? I don't know, I saw some GLP comments in the chat and then this pops up. So Vertex, no, not Vertex, where do you go? Vikings. So like Vertex, that doesn't make sense. But Vikings also got some positive comments on the stock and an $80 price target on that one. So going back to the consumer sentiment thing, we Vikings here, Vikings Holdings. So price target $80 from Jefferies, but I don't think it's the wrong Vikings. Apologies, wrong Vikings. Going back to the consumer sentiment, consumer spending type of thing. PayPal basically crashed because of those negative comments around consumer spending. We've got some more comments on that, not from PayPal, thankfully, but
time now for the CNBC All-America Economic Survey, holiday edition. For the past 19 years, we have tracked how much shoppers are spending for Christmas, and most importantly this year, what is behind the spending decisions. Senior economics reporter Steve Leisman has the details, joins us here on set. Steve.
Thank you, Melissa. This looks to be the Christmas where inflation is the red-nosed reindeer that is leading shopping decisions among American consumers in a way we have not seen before. The CNBC All-America Economic Survey finds 41% of Americans plan to spend less this year, 42% saying they're spending about the same, 16% shelling out more, 16% that is. Respondents always say they're going to spend less, but the spend less, it's up 6 points this year, the most since 2022. The average American who's buying gifts say they will spend about $1,200 this year. That's a 3.9 increase over last year, a decent gain and in line with some of the holiday spending forecasts that we've been following. That would not be a bad outcome for retailers, but the reason shoppers give suggests prices are sapping some of the holiday spending cheer, a potential sign that tariffs and other price increases being felt at the checkout counter. 46% of those spending less say the top reason is the high cost of goods, up 10 points from last year. It's been the top reason since 2023, followed by what used to be the main reasons, being paid less and the weak economy. But here, check this out. This year, the high cost of goods is the number one reason for the first time among those spending more. That's up 11 points from last year, beating out the usual top reason that people are being paid more, followed by having more gifts to buy and a belief in a stronger economy. So it's the top for both categories, spending less and more. Inflation as a factor in goods buying surged first in 2022 with the pandemic inflation. It leveled off last year, but then you can see the surge again happening again this year. Overall, 68% say gift prices are higher this year compared to last year, with a third saying much higher. And that's true of people who have already gone to the mall and did their shopping on the Black Friday weekend. So the affordability issue looks to be a significant part of what's driving the holiday shopping season and why we're saying inflation's the red-nosed reindeer this year.
Okay, so I guess the comments from PayPal are somewhat true, right? Because at first we were like, okay, we've seen the positive data from a Shopify and from the other companies out there. They seem to be doing quite well, especially on the year-over-year comparison. But now it seems like if again, this is just a survey, a sample, I don't know what sample, where they took it and who got asked the questions. But it doesn't matter. The data shows that, yes, people are going to spend less because the cost of goods have just increased too much this year, and that's why they're going to spend less. But on the other hand, maybe they've all just bought already during Black Friday, Cyber Monday, because everything was on sale. But it does seem like let's say the story that PayPal is trying to tell us checks out for now. I'm still saying also that next year, when you're going to get a bigger tax return, that is going to increase consumer spending for a specific quarter in 2026. So it could help the company, could help a lot of companies actually when it comes to increased consumer spending. Now, here we talk about consumer spending, buying things, right? People buying specific products. But there is actually more comments on that, but there is someone here that said that we have a new data, a new chart that came out from Subutrade. So let's look at that. Put volume jumped. Friday saw the S&P put volume at 2.932 million. This only happened 7 other times before. The S&P was higher each time 3 to 5 days later. I mean, even a week later, 2 weeks later, and 3 weeks later, the probabilities are very much in our favor. But as you can see, most of the data points are just from 2025. And one was 2024. That was the first yen carry trade crash, August 5th, 2024. And the odds are in our favor here, but there's not that much data to work with. Did I sell CoreWeave? No, I did not sell CoreWeave. Did not sell CoreWeave. Then the other side here.
Let's hit on it. Record 122 million people traveling, about a 2% jump from the levels that we saw last year. What does that signify? Does that signify consumers that are willing to spend on travel? Does it signify something else?
This has been a secular trend, Frank, coming out of COVID, and it continues all the way through. And frankly, we're expecting it into 2026, where consumers are spending more on experiences than they are on things. And that has worked well for the stocks you had up there, Hilton, Marriott, Hyatt, et cetera. It also is working quite well in cruise lines, and cruise lines have a bit of a different secular setup that we think is incrementally more positive that we can talk about as you're ready.
All right. So when we're looking year over year, if you're talking about flights and driving, that's up about 2%, kind of on the trend. But other forms of travel, they've jumped more than 9%. Buses, trains, and also cruise lines. What is going on with cruise lines? Why are cruise lines so attractive right now?
Cruise lines are being recognized by consumers as the better value proposition that they are. They have an all-inclusive nature to them. They are 25% less on average than the average land-based vacation. And I think consumers are seeing the cost of hotels and opting for the cruise lines. If you talk to Royal, if you talk to Carnival, they'll estimate that about a third of their bookings are from new to cruise customers. So people are discovering them. There's one element to it that I've experienced myself, which is the private islands in the Caribbean that the cruise lines are investing in. And they are a game changer because they have a little something for everyone, where patrons get off the ship, spend the day on an island, get back on the ship, and continue to sail, Frank.
Wow, private islands. I haven't heard too much about that. I want to go to a theme that you seem to be talking about. It seems like people are trading down with cruise lines. They're enjoying it, but they're trading down because they don't want to pay so much for flights and hotels. What does that mean for 2026? What do you expect the consumer to do? Because a lot of people are worried about their jobs. They're worried about inflation, rising costs and things like that. Does that lead people to pull back on travel, or simply kind of downgrade the kind of travel they're doing?
Our experience is that patrons will always go on vacation. It's just a question of how and where. And you're correct. I think patrons are trading up in value for cruises versus land-based vacations and incrementally more. When you look at, and we have a note out this morning that changes some ratings, that updates our 2026 outlook. One of the points we make in there is that the penetration of cruise among travel nights is still a single-digit number when you look at it in total. And we think that that is going to continue to grow. The other point I would make, Frank, is that the K-shaped recovery that we're all talking about favors luxury, and we highlight that in our note as it relates to Viking, which we've upgraded this morning, and the lower end consumers. But we think the
Okay, so this is the guy that actually upgraded a Viking before. Now let's have a quick look at the cruise lines, because we did talk a little bit about some cruise lines earlier this year, last year as well. But I mean, if we look at the weekly, it seems like in this case, this is a Norwegian cruise line. It started to pull back heavily mid-September. Mid-September, it pulled back heavily. It went down to its lowest point, almost 35%. If you look at Carnival, I think it's the same also. It started to pull back mid-September, dropped here all the way down to around 25% pullback. If you look at Royal Caribbean, this one, same thing here. I don't know what the heck happened earlier September, mid-September, but in this case, it's end of August for Royal Caribbean, also a 32-33% pullback. Since then, Vikings is a more luxurious cruise, and so here it's a bit different. It's not in the same category. This one has been performing extremely well, actually. But then if we look at a stock like Bookings, Bookings has also seen a pullback, which is also I don't know what the heck happened here. Maybe this is just after earnings, but it's also, this one also experienced a pullback of 21%. If people are going to spend more on experiences, Booking should definitely benefit from that. Another one that I covered last year when it was at around $100 or so, Expedia, it's at $276 today. This one, definitely an outperformer, one that flew under the radar, definitely benefiting from that, and might continue to benefit from it. Airbnb, high flying stock when it went public, but since then, not great. It's basically been flat for the last 4 years, basically almost 5 years since it went public. Still at around $130 or so. Growth rates for Airbnb has, of course, did come down quite a lot. So that's also one of the reasons. Yes, I know, cleaning fees, etc., etc. I know. But if people are going to spend a lot more, then I do guess, yeah, maybe it makes sense, right? Because the cruise lines, first of all, cruise lines, people that go on cruise lines love to go again on cruise lines. This has been proven time and time again. If you go and listen to the earnings call, look at the earnings reports. Booking-wise, it has, not booking the company, bookings for cruises, it has not been an issue for the past 2 years or so. People that go on cruises, they love to go on cruises. Okay, it's like a cruise cult. And so when you hear the comments that that analyst said, it makes sense, right? Because for the price of a cruise, you're getting a lot of value. You're visiting new places. You have a place to sleep. You probably have a all-you-can-eat buffet or whatever. Plus, you have entertainment on the ship. So why not? Right? Why not? Then if you go and look at hotels, hotels are probably going to be more expensive because you're looking at specific cities, room rates, and then it's just the hotel. Maybe breakfast is included, maybe not. Dinner, probably not, etc., etc. So yeah, the appeal for a cruise is quite high up there, I see we have some conversation here about Duolingo and Nike. There are amazing cruises from Argentina to Antarctica. Okay. From Argentina and Uruguay. What's the spot? I forgot the name. Duolingo and Nike. Well, two completely different companies. Nike is way cheaper. I don't think Nike is way cheaper. Nike is growing way slower than a Duolingo. I think, I'm pretty sure that margin-wise, it's far, far away from where it was and where Duolingo is today. It's a turnaround story. It's a turnaround story for Nike. I always ask the same questions for people that are interested in Nike. Are you interested in Nike purely because the stock is down quite a lot, or because you like shoes and I mean footwear and things like that? Because if you like footwear, then there is another company out there that does the same thing and grows faster. It's much smaller, but On Holdings is basically growing much faster than Nike and does the same thing. Then if you want to look at why you think Nike might be cheaper, but it's actually not, let's have a look here. Operating margin, Duolingo 11%, Nike 8%. Free cash flow margin, Duolingo 36.8%, Nike 7.1%. Gross profit margin 72%, Duolingo 42.7%, Nike. Net profit margin, Duolingo 40%, Nike 7%. Cash from operations, we have your Nike 3.6, let's call it $3.7 billion. And that has been, well, going down, whereas Duolingo has been going up. Now you might say Nike is cheaper purely because you're looking at a PE. Trailing PE 34.6 times, forward PE 35.8 times. Revenue growth 2 years out 3%, and EPS 7.4. Let's see what Duolingo is doing at the moment. We have a trailing PE of 24.4 times and a forward one of 50. Probably because there was a one-time impact here for the trailing PE, because I don't think it would have been this low. But revenue forward 2 years 30%, EPS 51%. So it's not really Nike being much cheaper, just Nike barely growing. Yes, the new, definitely he is turning things around, but it's going to take probably, I mean, he even admitted it a couple of quarters ago, it's just going to take more time than expected. But yeah, at the end of the day, you have to ask yourself, are you that interested in a footwear company? Maybe you're interested in the dividend, but then again, I don't think the dividend is that attractive. The only chance Nike can turn around is if they know it. I don't think it matters. World Cup or not World Cup, it doesn't matter if it's in the United States or not. Nike has their teams that they sponsor. It doesn't matter. Risk of being disrupted by AI, okay. Risk of being disrupted by other brands out there, very high. I mean, I can make the same case here. Risk of being disrupted, risk of being destroyed by a Chinese brand, by Adidas, by Puma, by Reebok, by New Balance, by On Holdings, by Hoka. The list goes on and on and on. Duolingo, risk of being disrupted by AI, it's there, but for now, Duolingo is becoming better and better thanks to AI, because I don't know if you know, but Duolingo Max uses ChatGPT. I mean, it has already been happening. It's not that it's not happening. It has already been happening. There is a reason why Nike has sucked as a business over the past 2 years. ACMR, yes, it's the how do you pronounce this? No, not Archer. It's the Scandinavian brand, no? I think. Good morning, Chris. ACMR, no. ACMR is the sell advanced semiconductor manufacturing equipment. Okay, ACM Research. No, ACM. I was thinking about something else. The Trade Desk got destroyed by Google and Amazon. They're not letting it compete. I don't agree with that at all. I don't agree with that at all. Again, the Trade Desk deals with the open internet, not with Amazon's own platform for advertising like Amazon Prime. That's the whole point of investing in the Trade Desk. It's them being exposed to the open internet and not basically putting ads on a platform like an Amazon or a YouTube or a Meta. Yes, more recently, growth has come down. They say growth should reaccelerate in 2026. Now let's see if that really happens. But it's definitely trading at a much better valuation today than it was before. Yes, it's down because of the previous CEO, but again, it shows that this brand can be disrupted, can have and face a lot more competition. The rise of Hoka, the rise of On did not come out of nowhere. At the end of the day, it's just shoes. It's just a t-shirt. They don't really have something special going on there. Some of the new shoes might be cool, but On, Hoka, Adidas, New Balance, those are all shoes at the end of the day. Plus, yeah, they mismanaged the whole pandemic thing, right? The whole pandemic thing they mismanaged. But then again, you cannot purely blame them on that. A lot of companies, even great companies, screwed up during the pandemic because, well, it's just something that came out of nowhere. You don't really know, and you never really thought about something like it. But it doesn't matter if it's a huge moat or not. People are going to buy shoes, whether it's Nike or whether it's another brand. It's a fact that On has been taking market share. It's a fact that Hoka has been taking market share. That's just a fact. Nike being recognizable around the world is also a fact. But so what? Has that helped them over the last couple of years? No. It was still a worldwide recognized brand. Didn't help them over the last couple of years. On and Hoka remains niche brands. I mean, I think they started as niche brands. It has become quite mainstream. It has become quite mainstream. On also thanks to the endorsement investment from Roger Federer. I mean, that definitely helps. But I don't think it's as niche as people would make it seem. I mean, if you go outside and you look at what people are wearing, I'd be surprised if you walk outside and you don't see at least a handful of people already walking with On shoes. Let's see. I like this quiet morning. So we do have some NVIDIA comments. We have one here from Bernstein. NVIDIA is still waiting on formal US licenses to ship H200s to China and hasn't received codified terms on the 25% government revenue share. Management says it is about 2 years ahead of Google's TPU program and sees GPUs as the better fit for cloud AI. I mean, of course, they're going to say it. Makes sense. And then NVIDIA themselves had something to say. Where is it? Hey, where did it go? Here it is. So NVIDIA unveils Nemotron 3 open models for multi-agent AI. So all of these announcements were made this morning, I assume, from NVIDIA. Now, when On is being worn by suburban dads, you know they are mainstream. Actually, no, I disagree. I disagree. Nike can still be huge, but at current growth rates, you cannot tell me that On is not gaining market share. When you are growing, let's see what they did last quarter. Just Nike can stop the bleeding, yes. Let's see. So, On last quarter grew 25% on year-over-year basis, and on a reported basis 34.5% at constant currency. Again, yes, the base here is very small because it's a much smaller company coming from a smaller base. So of course, the growth rates are higher. But again, the growth rates are higher. They are growing much faster than the market, much faster than other competitors out there. So they are taking market share from someone. Doesn't need to be just Nike, but they're definitely taking market share. If we look at, what is it, Deckers? If we look at their report, so Q2 increased 9% year over year, so not that fast, but Hoka was up faster than the overall company, so they're growing 10%. UGG is up 11%. If we go and look at Nike, again, from 3 months ago, they're reporting this week again, but from 3 months ago, Nike revenue were up 1%. That's it. It's 1% growth. So, of course, those that are growing faster are taking market share from Nike and from others. It's just the basic reality of what's happening here. Footwear revenue, if we're just looking at footwear, was actually down 0.7%, which of course is much better than what has happened the 4 quarters beforehand, right? Because before it was down double digits year over year for 4 consecutive quarters. Now it's entering 4 quarters, but one was already reported, where the year-over-year comparisons are going to be very, very easy for Nike, because you had double digits negative growth years last year. So the path is set for Nike to easily beat, but yeah. Nike do sponsor Chelsea. Unfortunately, they do sponsor Chelsea. I want Adidas back. Well, again, Air Jordans were Michael Jordans, but okay, Nike owns it. But Federer, pretty big deal. They are already sponsoring certain athletes. In tennis, they are sponsoring certain athletes already. And it's not just running. They have also now some casual shoes. So it is a growing brand. It is a growing brand. It's not just for running. What's going on with Uber? I don't know what's going on with Uber. Let's actually have a look at the market right now. Pre-market. Let's start with fintech. So we have a Dave that's up the most, 2%. Then Klarna 1.5. Well, what's going on? Let's put the daily back on, so it makes a little bit more sense. Sezzle is up 1.3. Sezzle really has been recovering quite aggressively. Hood is up 1.1, Affirm 1%, the local 1%, 4 is up 1, new as well. Pagaya is up 0.8, but it literally got crushed 9% on Friday. Block is up 0.7, same for Chime. Sofi is up 0.6, same for American Express. PayPal, the usual pre-market hopium, 0.4%. Bull is at also 0.4. Visa 0.3, MasterCard 0.1. NeoClouds, we have Nebius that's up 1.6% after being down 7% on Friday. Iron is up 0.9 after also being down 8.6% on Friday. CoreWeave was down 10% on Friday. Now it's up 0.6. Applied Digital up 0.9, Hut 8.5, White Fiber down 0.2, Cypher 0.8% up pre-market. Yeah, it's very good to see Cole Palmer back. Don't think we will see him against Cardiff in the Cup, but he should be back this weekend. Good morning, Rob. Good morning. Again, you are basically saying the same thing. Like Nike, it's okay to have athletes that get sponsored, but On is only living on Federer's image. I don't think that's true because, again, they sponsor Swiatek, tennis player, active tennis player. I think Ben Shelton is another one. Joao Fonseca, tennis player, also sponsored by On. Yes, they're not in football at the moment, but they are growing. They are definitely growing. Chips are all green at the moment, with CLAC being up almost 3%, Applied Materials 2%, Lam Research 2%. So it seems like semiconductor equipment makers are up in this case quite a lot, over 2%. ASML is up 0.7% at the moment. Nvidia on Friday was down 3.7%, quite a hit here. Now it's up 1.4%, and Micron is up 2.6%. Right now. As for big tech, we have Oracle that's down 0.2%, so still here at $190. Meta is down 0.1%, Microsoft is up 0.1%, same for Apple. Amazon is up 0.5%, Google is up 0.6%, Netflix is up another %, and Tesla is up 2% at the moment. There is some Tesla news, of course, that's regarding the car that is fully driverless. In Austin. So that's the reason why it's up today. And I assume that's also the reason why Uber is down right now, another 2% or so, because the market still thinks, just like last year, where was it? Just like last year, that AV is going to destroy Uber. So last year we went from $86 all the way down to $59 for Uber, because AVs were going to destroy Uber. Turns out that Uber is extremely profitable and still growing like crazy. Overreaction? I think so. Now we have Adobe that's down 1.2%. I do think it got a downgrade from an analyst, so that's why. It's crazy that one analyst downgrade can have such an effect on a stock like this. Insane. CRM is down 0.3%. Oscar is down 0.2% after it was up 4.7%. On Friday when all the rest was down. United Health 0.2%. Rob, do you still own United Health options or pure shares? ASIC shoes are growing 20%. I assume New Balance is also growing quite rapidly, and Adidas is definitely growing faster than Nike at the moment. Let's see, where is Mercado Libre? Mercado Libre is here back above $2,000. We have Rubrik that also nice pullback here from Rubrik back to the 100-day moving average, so still above $80. Yes, you have 2027 options. Okay. I mean, I don't know what the strike price was again, but I still think that United Health 2026. And for a lot of these companies, actually, I think they'll surprise. Yeah, okay, fine, but Swiatek is, well, was it she? Number 1 or 2, or maybe now 3 player for women in the world. Joao Fonseca, young superstar in tennis. Sure, it's not Alcaraz or Sinner, but going back to your other point, the counter argument, it's still Federer. And so if Federer thinks it's good enough, should be good enough for for everyone else. But yeah, On is still a small company compared to Nike, so I don't think they have the money to go and spurge insane amount of money on tennis players. But again, it is a growing brand. It does definitely help to have Roger Federer. Let's see, Duolingo still here around the 200, just under 200 actually. Someone, C Limited you asked, okay. You ask, I shall look it up. C Limited, yeah, this is also so stupid. I don't own it, I don't need to own it, but whoever owns it and was looking for reasons to add, I don't know why it's down so much. The business, it's doing very well. It is growing. It seems like e-commerce players that have exposure to Latin America or Southeast Asia have seen a pullback. I mean, Grab, same thing here. Also a pullback from the $6.7 all the way to 5.2. Nice rebound here on the 200-day moving average, actually. So, yeah. I mean, Uniqlo is Japanese, so yeah, he made an insane amount of money going from Nike to Uniqlo. That was crazy. Same as Novak when he was Uniqlo, no? I think, and went to Lacoste. I think so. Yeah, this is another story, of course. We have iRobot, right, the maker of Roomba. So they filed for bankruptcy, and they're actually going to be acquired by a Chinese company. Plot twist is the Chinese company that used to make the robots for them, they now own the whole thing. So yeah, well, actually it's not, the deal didn't go through because of regulatory issues in Europe. And also, yes, Lina Khan's FTC, pushed by, of course, Elizabeth Warren as well. Because why would they? It's the same with, what's the airline, Spirit Airlines, that the acquisition there also couldn't go through. Right? Why let a successful Amazon acquire iRobot, make the company probably better and more efficient, if you can block the acquisition, make sure that iRobot has to lay off a lot of employees to try and survive, and then eventually file for bankruptcy and be sold to a Chinese company. Logically speaking, option 2 sounds, of course, 10 times better, right? Another one for the books. Another one for the books of idiotic decisions. So stupid. Yeah, it's e-commerce. It's consumer spending and all of it. Yeah, for everyone that thinks that I moved, first of all, I am very happy that you guys think that I live in such insane apartments like the last background that I had. But no, of course, those are AI generated backgrounds. I mean, I wish that one day I could maybe live in a skyscraper like this with an insane view, but not for now. Not for now. All right, let's get ready to rumble. Well, just open the market, actually. We shall do it in a couple of seconds. The market is about to open. But yeah, I did change the background just to change the environment a bit more festive. So, Ding, 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 bing, bong, ladies and gentlemen. The market is open. It's Monday, December 15. Markets are open. And so let's see what's going on right now. We do see a lot of green at the moment, which is better than what we had on Friday. What do I use for the background? I mean, how do you see this? It's NVIDIA broadcast. How did I generate it? Nano Banana Pro, of course. Nano Banana Pro. I also have the older background, but with a nice little sunset. Well, you'll find out soon enough. So, no, the gong has still not arrived. The gong is still not arrived, but that's usually what happens when you order from Chinese websites. But it should arrive this week, according to the tracking, which could or could not be accurate. I don't know. So let's see what's happening. Let's start with big tech companies. So big tech companies, we have Oracle that's down 2.5%, Meta is flat, Google is flat, Microsoft up 0.1, Amazon 0.2, Apple 0.3, Netflix 0.6, and Tesla is up 3.3%. Looking at chip stocks, we have CLAC is up 2.6, same for Micron. Lam Research is up 1.6, NVIDIA 1.5, Applied Material 1.5, Intel is up 1, TSM, let's call it 1, Qualcomm is 1, same for AMD, ASML is up 0.6, Marvell is up 1%, and Broadcom is down 0.2% right now. Looking at NeoClouds, they were green they were green pre-market, they're now red. Cypher is down 3.5, now 4%. Applied Digital 2.5, Iron 1.6, so back under 40. Hut 8 1.8, Nebius 0.7, and White Fiber is flat. CoreWeave is up 1%. So at least there is that. Micron, I said I'm going to take profits, and I think, I mean, it's up now 3.5%. I think I should do it now. It's crazy. My average cost per share is $90 for Micron. Who knew that Micron? We knew, exactly. Thank you. Let's take a little bit, and then we'll see if these NeoClouds continue to go back down, might be a good opportunity to add a little bit more. All right. FinTech. This is also volatile, jumping all over the place. Sezzle was up over 1% pre-market. It's now red to flat. Block is up 2.3. PayPal is up 1.5, 1.4 now. Surprising. So Block and PayPal, the ugly ducklings, are up for now. I expect Micron to go down. No, I don't expect Micron to go down after earnings. Like I said, I'm up 176% on that position. It's number 5. And so a nice, I won't say rebalance, but just profit taking of a huge outperformer this year for me personally. Let's see. Like this. Now we have a little pullback. So I guess let's have a look at the general list and we see what happens over the next couple of minutes, because today we have the exact opposite. We have green that turns into red. Who saw Jordan here. Jordan still looking healthy. You saw him in court. You mean a legal court or on a basketball court? This is two extremes here. That is a good idea. That is a very good idea. Or both, yeah. Or both, that's also possible. Let's see if we've got some news, right? Because maybe there is a reason why neoclouds are down. Actually, it's not like the market really needs reasons to pull down AI stock. The market is always looking for reasons to try and pop the AI bubble, the AI narrative. Let's see. I don't think we've seen anything specific this morning. It's probably still the same Oracle, Broadcom type of story, because I don't think I've seen anything specific, no, with regards to those names. He's been. I didn't know he has a NASCAR team. I mean, MJ does like to do a little bit. Oh, you guys want to see something cool? So I've been playing around, of course, with Nano Banana, and I do think I made something pretty cool. This, I like it very much. I mean, the prompt is very simple. I can also, of course, swap people in and out. So I have one with, I remove Babe Ruth and Wayne Gretzky, I think he is, the hockey player. So I removed one for Michael Schumacher. And then I replaced the other one with Rafa Nadal. But I'm looking, I'll probably upscale this quite a lot, do some tweaking here and there, and maybe I'll print it out, because I do think it's a very, very good one. Pretty cool thing. You have Roger here in his Uniqlo outfit. Yeah, you could have Cristiano Ronaldo, could have Novak Djokovic also. That's the thing, I can put people in and out if I want to. But yeah, anyways, going back to the red stock market. It's not completely red, let's be honest. Just a little bit. Now, if we rotate away from AI stocks, where do we go? Well, the market will probably go to safer place. So financials, banks, healthcare, I think that's where the market could be going, is already going right now. This is what we've seen over the past couple of weeks. Could we go towards dividend plays? Yes, we could, especially as rates come down. I think it could work. Messi and Jordan instead of Ronaldo and LeBron. Well, first of all, LeBron doesn't even come close to that picture. It's MJ and Kobe. And then we'll talk who's number 3. Healthcare and biotech, yeah. Healthcare, definitely. Biotech, I think, is still, again, depends which one. But there are still some risky plays out there. A lot of unprofitable biotech companies. But medicine, I do think that and it's not just me saying this, it is one of those areas that will benefit a lot from AI. I think this is what Demis, no, not Demis, the Demis from Microsoft, Mustafa Suleiman said to Bloomberg. So he expects the first real use of superintelligence to hit medicine. He says they already have systems that can diagnose any rare condition in the literature better than humans, cheaper, with fewer tests and higher accuracy, currently in independent peer review ahead of clinical trials. It makes absolute sense that this is going to be the case. So yeah, I do think that yes, we're going to see quite a lot of moves over the next couple of years for sure. Kobe is overrated. Yes, Kobe is overrated. Crazy talk here. Kobe is overrated. LeBron is overrated. The guy scored I don't know how many points in the weakest era of NBA defending. Let's take LeBron in the MJ era or early 2000s. Let's see how much he will, how many scores, how many points he will score. Give me a break. LeBron going from one team to the other to win the championship. Please. Yeah, Michael Phelps, I also have one with Michael Phelps on it. Michael Phelps with all the medals from the Beijing Olympics. Kobe doesn't pass the ball. It's because Kobe scores. That's why. Kobe passes the ball. Kobe even plays when he's injured, when he has a broken finger. Kobe is a one-man team. There is no I in team, no? Or something like that. But there is a me. Again, you don't disagree. You're just raising a different point here. More skilled does not mean better defending. There is literally no defending over the last decade. I actually made a short on my previous sports channel where I mention the average points scored every season or almost every season over the last 2 decades. And it goes up substantially. It goes up substantially. The defending today does not exist. Does not exist. There's no defending today. So can we have some green here in the stock market, or the Grinch took over Santa's job? What is this? This doesn't make any sense. This doesn't make any sense. I was promised the Santa rally. We are getting the exact opposite. We are getting crap. Nothing. Nada. I mean, you put Dennis Rodman in today's NBA and the guy blocks and has countless of rebounds. He's probably going to be MVP every single season. But if that's the price to pay to see this, then I'm all for it. If that's the price to pay to see a PayPal up 1.5% on a red day today, perfect. If PayPal is the Grinch every day for the next couple of weeks. No problem for me. No problemo. That's because today the game is weak. A bunch of weak players. You barely touch them. You blow past them, but they're all falling down like football players, like Neymar actually. You just look at them, they fall, they cry, oh, foul, ref, help me out. This was supposed to be a men's sport. So if 60-40 split, 60 red for the fintech players, but yeah, I mean, Pagaya is now back under here, the 200-day moving average. I did say that I might just transfer Pagaya from the outside portfolio to the one we're tracking, because it's, yeah, I'm down maybe now 1% or so on that position. So it might be a good idea just to track it better. Iron is down, iron is down 5% right now. Nebius down 2.5. The big gap for Nebius, again, this gap here, the reason for this gap is the Microsoft deal. Are we going to go back to pre-Microsoft deal? I mean, it's definitely possible. We've seen crazier things. The 200-day moving average does sit quite close to the price where we started to go back up. If we go back down, I'm going to load up quite aggressively. But in the meantime, yeah, I mean, we were there. Where was it? 3 weeks ago, same prices. It's 3 weeks ago. But the chip stocks are green. Chip stocks are green here. We have CLAC is up 4%. Do we have some specific news for the CLAC? Or is just semiconductor? We have, okay, yes, wow, okay. Okay, all right, calm down, CLAC. Jeffries upgraded to buy, raises price target to $1,500. Again, the power of one analyst note is insane. It's insane. It's like one analyst note, poof, up 4%. Then when you look at an Adobe, it's one analyst note, down 1.2. Applied is going to go back to back, 10% declines. Do we have some news from Applied? Probably not. We did have some news from Google. I think they invested in Malaysia. Let's see. No news from Applied. What about CoreWeave? If anyone has news specific for these companies, let me know. I don't think that Nebius has any news either today. No news. No news for any of them for now, from what I'm seeing. What's going on with Sofi, social finance? What's going on with them? Nothing much. It's been flat for a week now, so we're still here above the 100-day moving average. A good point of accumulation if you want to. Still a very good company. Still a very good company. SGA is like Kobe's spiritual successor. I mean, Kobe is one of a kind. Is one of a kind. Anything else that I can find? Nothing. Nebius free fall, yeah. I mean, the whole neocloud sector seems to be falling for free. Waterfalls. Iron down 7.3. Applied 10%. Cypher 9.5%. CoreWeave 5% now down, and Nebius down 4. Oh, let's call it also 5%. They're all falling down quite quickly, so I don't know if there is something going on or not. Haven't seen. You read an article that claims that Rubrik deserves to trade at a lower multiple of revenue, more in line with commodity data storage businesses, but are you sure it's Rubrik? Because I think Rubrik deserves to trade at cybersecurity growth company multiples, not data storage businesses. Just got here. Well, first of all, welcome, Mr. Alpaca. Are we having another AI sell-off today? Seems like it. it's more towards the so-called neoclouds, less towards the chips, right? Because chip names are all green. Big tech are, I mean, other than Meta and Tesla is at all-time highs actually. So congratulations. $480, up 4.6%. All the rest is basically, well, flat reddish for big tech. Chips are fine. Neoclouds are getting crushed. And I spoke too soon. Spoke too soon for PayPal. PayPal was up at 1.5%. Now only 0.5%. So the rest should rebound, because usually that's, I mean, what is this? A broken market. What is the VIX? No, let's first look at Figma. This one's down 4.5% at the moment after being down 6.7 on Friday. Okay, interesting. And the VIX is back at 16.4 at the moment. That's a llama, not an alpaca. That's a... Yeah, it does look like Cusco. Or is Cusco... Let's see. Yeah, that is a llama. Is it? Man, you said that with so much confidence. And maybe it's because of the place where it is. Makes sense. Yeah, okay. It's a cat. Yeah, Machu Picchu next to Cusco. It's like Cusco, the animated movie. Why is Oracle falling again? I mean, the whole... Okay, this is also something that I thought about. When you think about it, Oracle is just a CoreWeave Nebius Iron, but much, much bigger. They're also heavy capex, in debt, huge build-outs. And so if Oracle goes down, the neoclouds goes down as well. Well, the neoclouds are really getting crushed today. Applied Digital is up 11%, Cypher 11.6. And I don't know. I don't know why these specific names are down so much. But it's someone asked here, is this the end? Yeah, I think this is, again, if you make the comparison that, or if you agree with me that Oracle now really resembles a neo-cloud type of behavior, or neo-cloud type of behavior resembles an Oracle, then yes, I would agree. Are we selling Nebius? I'm not selling a share of Nebius. If we continue to drop, I will just buy more. Actually, might maybe buy more today if we go at $80 or so. But we could, yeah, we could. For it to fill the gap, it needs to go down another, let's call it 20%. Something like that. Will it happen? I don't know. But just because the stocks are down doesn't mean that the thesis is suddenly thrown out of the window. Thesis is still the same. You're just buying it for cheaper today, or less expensive. I know some people will say it's not cheap, it's just less expensive. Okay, I agree with you. So who's still green? PayPal is going to be red right now. Barely green there. Palantir is green, Rubrik is green, then AMD and Nvidia. Even United Health is red. Melly is back to $2,000. Oscar is down 8%. Shift 4 down 2.5. Okay. I mean, seems like this is Santa giving us maybe gifts or something. Uber is down 4%. So we're back to the lows of November, end of November. We've also seen it reach this price, previous resistance back here, February. I mean, Uber is very cheap. Uber is very, very cheap. Now, again, there are two camps with Uber. It's the camp of Waymo and Tesla are going to take the whole market. You won't need Uber. And then there is the other camp. I'm in that camp where I don't think it's just going to be two players. And Uber is just going to play a central role in the distribution of AV fleets, food delivery, e-commerce delivery, etc., etc. A week ago, I said I'm done buying unless the market gives me some great opportunities to buy more. Seems like maybe today is the day. Maybe today is the day, or maybe tomorrow will be the day. Who knows? But we are seeing some very, very aggressive sell-offs. So iron is now down from the peak. Again, it should have never traded at $77, but just for the sake of it, it's down 52% from the recent the recent peak from the start of November. Yes, AI equals ChatGPT, which again should be a good thing, right? Because you would like OpenAI and ChatGPT to continue to grow and to find ways to monetize it so they can generate more revenue, which will then go into all of their investment plans of $1.2, $1.3 trillion, right, over the next decades or so. But again, has something changed from a month ago, from a couple of weeks ago, when all of these companies reported their quarterly figures? No, they're all still going to grow, advance, invest, spend a lot of money, build huge data centers. Nothing changed. The price of the stock did change. That's it. I did add Netflix to my watch list. Yes, I did. Do I think entertainment will be a good sector for 2026? Well, I mean, we have three players here. One where the stock has already gone up quite a lot, which is Warner Brothers, because well of the acquisition. So you can take this one out of the equation. Then you have Paramount and Netflix are trying to buy Warner Brothers. Netflix has the agreement at the moment. Are there other names out there in the entertainment sector? What are we looking at? Live Nation or something like that? I don't know, but Netflix, it could be dead money, right, until this whole acquisition thing gets resolved, or it could, yes, be a very good opportunity today and it outperforms. I do think over the long term, it definitely outperforms from here. So it's no questions asked. But other names, I don't know. No, of course, AI cloud demand is, I mean, it's not because stocks are down that suddenly AI cloud demand, poof, disappeared. AI cloud demand is just at a very, very early stage at the moment. As more and more apps come out, they grow, more users use it. It becomes, that's the most important part, it becomes more useful. You'll have, of course, more inference, more tokens get generated. And as these apps get more useful, people might maybe pay for certain services that they didn't pay for before because it augments whatever they have to do. Still, very, very early days. Disney, yeah. Do I see myself ever get back? I'd rather buy Netflix, if I'm being honest. I'd rather buy Netflix. I do think that Disney has turned around from a business standpoint. They're generating billions in free cash flow now. Cash from operations is going up. They're buying back shares, paying a dividend. So, and the direct-to-consumer business is now becoming profitable. So, definitely they turned the ship around. But If I had to choose, I go with Netflix. What is going on with Iron? Again, same thing that's going on with Cypher, Applied Digital, White Fiber, Hut 8, CoreWeave, and Nebius. They're all down today. Either something will come out pretty soon, like some headline or whatever. Or it's just an overreaction. I'm just trying to look at some things here. See if I can find something. But it doesn't seem like it. Doesn't seem like it. They have a good post here on the whole Uber thing. So let's have a read here. So convinced Uber bears have no idea what Uber strategy has been since they are hyper focused on AVs killing them, but I will share some thoughts. The Q3 numbers. Gross bookings are up 21% to nearly $50 billion. That doesn't look like a dying business. Okay, counter argument is that before a business starts to die, they usually peak. It's the bear counter argument. In fact, they are reaccelerating despite Waymo market share being the largest it has ever been in markets where it is not partnered with Uber. The logic of Uber being the demand aggregator is very sound. Robots are expensive assets. You can't have them sitting idle. This will be tough for bears to understand, but the demand for ride sharing fluctuates a lot. Relying on AV networks would likely mean there would be an oversupply of AVs a majority of the time, and most of the time, these depreciating assets will be fighting each other to fill demand during a majority of the non-peak hours. How does Uber fix this? Uber uses AVs for the predictable base demand and human drivers for the peaks, rush hour, weird routes. That's why Waymo partnered with them in Austin and Atlanta. Waymo gets instant volume utilization without having majority of idle depreciation assets. Wait, what? Uber, what? Wait, what? Okay. Uber keeps the customer interface, fine. They aren't getting replaced, they are becoming a bigger, better aggregator. Another extremely large and largely ignored plot hole in AVs dominating Uber to consider is climate. Okay. AVs have only proven to work in Sunbelt states, ideal climate conditions. They are beginning to map out in harsher climate cities, but places like the Midwest during the winter would likely never work for AVs in the near future. Debatable. If humans can drive in these conditions, I believe machine will be able to drive in these conditions as well, because human is bad driver. His last thoughts here is AV Ride entering Texas, partnering with Uber in both delivery and rideshare, also strategic partner there, is pretty much the last lane in the coven for the thesis that AVs are killing Uber. I mean, Uber has investment in a lot of AV companies, actually. Before, when it was just Tesla and Waymo in the market, there could have been a chance of a duopoly squeezing out Uber. With AV Ride plugging into the Uber network alone with other future OEM projects that will come online very soon, 2026, it is very clear that the market will be fragmented. For most use cases, it doesn't matter if Waymo is better at intercity travel because the majority of use cases, all AVs will be a commodity. I mean, that's my conclusion as well. I mean, I think autonomous vehicles at the end of the day is going to be a commodity. I do think that there you're going to have, yes, AV Ride, WeRide, Pony AI, Mobileye, Waymo, Tesla, Baidu or whatever. You're going to have a lot of companies that do these types of services. Yes, some companies like the Tesla cars are just going to look like normal cars, while you have Waymos with LiDAR and things like that and cameras. As a passenger, I couldn't care less if you pick me up in a truck or if you pick me up in a normal looking car. Can you bring me from point A to point B. That's the only requirement at a normal price, of course. That's the only requirement I need. We also had Dara, CEO of Uber, which I am still trying to get on the channel. It is getting I don't know why these people never read their emails or their LinkedIn messages, but I will keep trying. I will keep trying. So yeah, he said last week that robotaxis are $1 trillion plus business and says that Asia will drive the boom. He's told that to Bloomberg. He expects to be in 10 plus markets next year, sees great potential in Japan and big opportunities in Hong Kong and Australia. Uber, of course, is not just an American company. It's a company that operates in, 70 markets worldwide, if not more. And so it doesn't, again, the bear thesis to me is still only one side. It's Waymo, Tesla take the whole market, and that's the bear thesis. If it happens, then I agree. I understand, but I just don't see it happening. Yes, Tesla has the advantage that it owns everything, right? It manufactures the cars, it manufactures the brains, so it owns everything. I agree with that. But the cost of LiDAR, the cost of everything tech-wise has been coming down each and every year. But I always see the same argument. Oh, Waymo's cost $200,000. No, that's the argument I heard 5, 6, 7 years ago. A Waymo today doesn't cost $200,000. Okay, the cameras got cheaper, LiDAR got cheaper, and now we're already at the 6th gen Waymo, which means the cars are also cheaper. The Jaguars were very expensive. The Hyundai's Ioniq are less expensive. Plus, I mean, Waymo's job today is not to be profitable. Waymo's job today is just to deploy autonomous vehicles, have more and more miles, gather data, show that AVs are actually safer than human drivers. And then if you can, I mean, the profitability of this business is going to happen. What you want first is to have massive adoption. That's what you want to have. It's massive adoption because, yes, if you don't need a driver, then the car is just driving every day, every hour, well, hopefully every hour, making you money, nonstop. And so you are going to recoup that investment quite quickly. Of course, if the adoption takes off. I do think that, and this, yes, we can go back to the World Cup argument. The World Cup argument is that Waymo is going to be available in a lot of World Cup cities next year, which means you're going to get suddenly a huge exposure to people from countries where autonomous vehicles are not going to be a thing for the next couple of years, right? European countries, South American countries, Asian countries maybe, yes, African countries, they're all suddenly going to have exposure to self-driving cars. They're all going to go back to their country and maybe they're going to ask their government, actually, hey, hello, we just tried autonomous vehicles in the United States. It's safe. It took us from our hotel or Airbnb all the way to the stadium. No problems. Huge adoption is coming in 2026. And yes, I know Tesla isn't using LiDAR, but my point is that the cost of LiDAR is coming down so rapidly that the argument is going to be, for just an extra couple of dollars, why would you not put LiDAR? That's basically the counter argument to the counter argument. All right, let's see what we have. Oh, too good to be true, huh? Yeah, it was too good to be true. But at least Block is also flat now. So Block and PayPal were the high-flying fintech names, but couldn't hold up. The neo clouds are, almost all of them are down double digits. Nebius and CoreWeave are down, let's call it 7% at the moment. Chip stocks are some of them are turning red, but I would call it flat. Qualcomm and Intel. Broadcom is down 3.2%. And big tech, only Tesla is up 3.5%, was up a little bit more. But I mean, in a market like today, I don't think people should complain about that. It's not just CoreWeave, it's all the neo clouds. I don't know. I haven't seen anything right now on my feed or anything. So we do have a comment from Fed Miran. The comment is, don't see evidence of concern in inflation expectation data. Okay, I guess it's good. 6% profit on Rubrik, sell and DCA into Sofi and Nebius. Well, I'm not touching Rubrik because I've just built up that position, so that's not going away anytime soon. But if you feel more comfortable owning Sofi and Nebius, you do you. And by the way, thank you for the super chat. But yeah, I'm not selling Rubrik for something else. I did take profits of Micron, and I am maybe going to use that cash already today to buy some more, maybe some more Uber, maybe some more Nebius. Here in Croatia, Rimac will put its own robotaxi in our capital. What are they going to do? Bugatti robotaxis? I mean, Rimac makes some insane cars. Insane. I am very wrong on this take. Tesla will dominate the whole autonomous market because they can expand faster. So why aren't they expanding faster already today? Right? It doesn't make the arguments don't make sense anymore. Like Waymo needs pre-mapping, Tesla does not. So why is Waymo suddenly growing in 10 new cities? Right? If it took so long, how come Waymos are driving in more cities in the United States than Tesla is? If your argument was true, Tesla would have been in way more cities than just Austin. All right? But it is not. Next CPI report is Thursday, this Thursday. What wouldn't you touch with a 10-meter pole? Novak. Or Novanite. I thought it was Novak. I was like, huh? No, I am a Tesla bull myself, but I'm a realistic one. There are way better people that do options than myself. I am just a simple man here. There are way better. I think Amit did a good video on his channel a while ago. I think TJ the Wheel Deal. Let me show you. I think he does a very, very good job. If you want to learn more about options and the whole thing here, go follow him on X and even on YouTube. Very good account for everything options. I'm definitely not the man. Parkef is a Tesla Ultra Bear. I don't think he's an Ultra Bear. I just, first of all, I don't know what he said in his video. There are more cities. There aren't more cities. They have Austin, and they started to have a small pilot program, the West Coast, and that's about it. Yes, it is true that if you have FSD enabled in your car, you basically have a robo-taxi, but you still need to be in the driver's seat, right? I mean, I've been in that Tesla with FSD enabled, so I know they exist. I don't disagree with you on that part. But you are not able to launch in 20 cities like Waymo at the moment. Regulations is one of the things, which is probably why I'm not going to see any real autonomous revolution in Europe anytime soon. So, last little recap here. Oh, you guys didn't tell me. I forgot to close the poll. But it doesn't matter. 55% of you still thought it would be green. So 55% green, 30% red, and 15% flat. Xiaomi cars, I think we all saw the same. I mean, I've seen them before. I called them, if they were Italian cars, they would have been called copy pasta, because they are a bit of a copy paste from a Porsche design. But yeah, I've seen also the recent MKBHD video on it. They look very good. Are they better than a Tesla? I don't know. I don't know all the specs, and I don't know how long that car does survive, nor do I know how good the tech really is. And it's $27,000 because it is state-sponsored cars. Teslas in China are, of course, cheaper than Teslas in the United States. That's also something that Marquez did not mention in his video. Like, how can you say, oh, this is a $27,000 car when it's $27,000 car because it's only made in China, but not compare it with Tesla cars, which are also made in China, which are much cheaper than Tesla cars in Europe and in the United States. Like, he basically mentioned an apples to bananas comparison here. My views on AMD are very bullish on AMD. Yeah, I mean, try to drive in Naples, try to drive in a lot, yeah, especially in Italy, but yeah, in France as well. Good luck with that. But the majority of the driving is anyways happening in big cities or between two big cities. So it's what? It's highway and then a little bit of driving in the city. So shouldn't be that complicated. But yes, it's true. If you want to go into like a little pittoresque environment, I don't think an AV is going to do the trick, at least not for now. But yeah, can you imagine it driving in like small street in Naples or in Rome or anything like that? So yeah. You should have been buying Tesla at 200. Well, first of all, I bought Tesla at 230. Got a lot of angry comments on that video. But yeah, should have bought Tesla at 200. I bought Nebius at 24. So it's at 80. It's also quite good. So yeah. Again, this whole autonomous vehicles type of conversations that people have here, to me, the more autonomous vehicles that will be on the road, the safer it will be to travel by car. Because the human is the danger. It's not the car. It's not the AI controlled car, in my opinion. The human that's tired, angry, sad, on his phone, looking at his phone, driving with earbuds in his ears, that's the dangerous driver. The AI that is not sad or has emotions or is tired or is not focused, I don't think that is the problem here. Yeah, autonomous trucks. I mean, Uber is also invested in Aurora, I believe. But yeah, autonomous trucks. Why do people need to drive throughout the whole night, 12 hours, 15 hours, every day to go from, especially in Europe, right, from one country to the other, from Poland to Belgium. Why not have trucks do it? People will say, yeah, but why not just put everything on trains? We are also using trains, we are also using boats, but some are just going to use trucks. That's it. So yeah. Anyways, for now, markets are not that are not in a giving mood, let's say. Now there are barely a couple of names red. We started off with a lot more green than red. We do have a long week ahead when it comes to macro data. So expect some fluctuations. Let's actually see what happens with the VIX today. Right now at the close, so VIX is up 7% at the moment. VIX is up 7% right now. All right, we'll see. We'll see what happens from here on out. The only thing I can say is I don't think you should freak out, because it's not like suddenly the AI demand is gone. It's not like suddenly these neoclouds are going to disappear, or fintech names are going to disappear. Chip stocks are still doing fine. So don't freak out. It's December. It's actually a slower month than usual. We might still be getting the Santa rally since we still have the rest of the week and next week. I did already take profits on Micron. I sold 45 shares for a 175% gain. Not too bad, I would say. Not too shabby, which did increase my cash pile. So I am a bit more comfortable at the moment. So with that said, thank you all for joining me on this less fine Monday, but when we are all together, it is a fine Monday morning, afternoon, whatever you want to call it. So I do appreciate all of you joining me. Let's have a quick look at the new and improved background. I do like it very much, actually. It's like a very cozy one. But yeah, anyways, have a great rest of your day. Don't stare at your portfolio for too long. If you see some good deals, just maybe click on buy here and there, or just do nothing, because sometimes doing nothing is actually the best thing that you can do. Anyways, that's all I've got for you right now. See you all tomorrow morning, or maybe later today. Bye-bye.